We've had some massive news out of the US this morning, and if you are an equity investor, you'll be having a big green day. So the US courts have decided that Trump's Liberation Day tariffs that he set up in early April, and the consequent tariffs that were, increasing against China, increasing against the EU, have been deemed illegal. So it's massive news. Tariffs have been driving the market, well, all markets really, over the last 3 months. Both international equities, US bonds, domestic bonds, everything has been driven by tariffs. And this is a major change in investment markets and in the underlying economy. So just looking at futures today, this morning, we've had the Tokyo index up 1.9%, the S&P 500 up 1.5%, the Nasdaq, which is a more tech-focused index, is up 1.9%, and then we've also got the European index up almost 1% in early trading. So it's a pretty massive day, and if it continues, if this sort of ruling persists and it goes through, then it can have major implications for stock markets and bond markets around the world, and for you as an investor, what that means for your portfolio. So in this video, I think it makes sense to start with talking over the Liberation Day tariffs and the impact, both short-term and long-term, that they had. And then from that, we can sort of reverse engineer what the removal of those tariffs will do to, again, the economy and to markets. And then towards the end of the video, we're going to take a look at some of the commentary that's been coming out of the major US banks and the major sort of institutional money managers to see what their thoughts are on the tariffs, see if Trump can maybe do some sort of workaround to then increase the uncertainty and increase the impact of tariffs, or whether this is it. And basically, again, the implications for your portfolio and for my portfolio as investors going forward. So let's start by going back to Liberation Day and Trump's little poster and all of his tariffs and how that came about. Trump has had an agenda against tariffs for decades. He's always thought that the US was being ripped off because the short of it is the US wants to consume more than it produces. And the only way to do that is to import stuff. Because if you produce everything, you're producing 100 things and you want to consume 150, that 50's got to come from somewhere and you have to import it. That's the crux of it, but Trump doesn't see it that way. Trump sees it as, if we're importing, then we're doing something wrong or other countries are ripping us off. So he enacted, because of the size of the deficit, say if it was 150, that's a 50% deficit, let's just say it was that. He announced some emergency powers. And that means he can basically bypass all of the sort of democratic processes of the US government and just do effectively what he wants, because it's an emergency. What the court have said is that it's not actually that much of an emergency, and Trump's basically taken it way too far, and therefore they've reined it all back. And I think they've given him 10 days to sort everything out and go back to basically how we were before. Now, there are workarounds. He can use other bills, other previous legislation to get around this. However, that might not happen. So the first impact is more uncertainty. Whether tariffs go through, whether tariffs don't go through, we're still left in this heightened uncertainty regime that Trump has introduced. And that's why you've seen gold hitting such new highs. That's why, there was that big sell-off in global markets around, a month ago, 6 weeks ago, because markets do not like uncertainty. So the first impact of this removal of tariffs is that maybe perhaps unintuitively, uncertainty hasn't really been removed and markets don't like that. That said, we all knew, or, the broad expectation was that tariffs are not good for growth. If you've got free trade, generally, promoting capitalism is the best for the global economy. Putting governmental barriers, tariffs, whatever it is, taxes, quotas, whatever it might be, is generally not good for growth. So that's why you've seen stock markets rally so sharply today. The growth story, the growth train, if this all goes through, would be more back on track, and that's good for equities. More spending, more investment, more earnings power. That filters through into equities, and stock markets are better off. So that's a big benefit. If this does go through, we've got the uncertainty still, but the growth story would be more robust. The only other real benefit in the short term is the potential for political uncertainty risk premium to reduce. So again, Trump's been acting effectively as a sort of dictator, doing anything he wants under these emergency powers without having to go through Congress or the courts or wherever it might be. If we're starting to see checks and balances come back through into the US political system, then that again will be a benefit to markets over the short term. Now, thinking about the long term, I think for me, that's where the trickiness comes in, and that's where what's been done sort of can't be undone to some extent. Just because the courts have shot Trump down, Trump is now not going to say, oh yeah, you're right, you're right guys, I was wrong about tariffs, my emergency powers were too much, I'll rein it back in now. With Trump and his ego, what's probably more likely to happen is he doubles down or again tries to find those workarounds. And as a UK investor or a European investor or an Asian investor, these guys carry a lot of money, they have a lot of weight behind them. And if they're looking elsewhere for their bond exposure, for their equity exposure, that marginal flow into the US isn't going to be there. You know, for the last decade, last 15 years, it's always been Trump, the US is free trade, the US outperforms, the US dollar goes up. Like, this is a virtuous cycle, and if we get into US assets, we will do very well. Personally, for me, I think that thesis has been shaken. Maybe, you know, when Trump, after the midterms or when Trump is gone, that might change. But for me, I do think that long-lasting, again, that virtuous cycle for the last decade and a half has been broken down over this Trump presidency so far, and that's not going to change. So for me, as an investor looking to allocate my money, not financial advice, the marginal pound is less likely to go into the US dollar or US dollar assets than it ever has been. Therefore, in terms of market expectations, again, you've seen this short-term rally across the world. You've actually seen US small caps rally quite sharply. I think the the Russell 2000 futures were up 2.5%, almost 3%. So I could see this sort of relief bounce carrying on for 5, 10, 15% or so. But the long-term thesis, 2, 3, 4, 5-year time horizon, I'd still be wary of the US personally. So with that all covered off, let's come on to what US institutions and large money managers are saying about the tariffs. Starting with UBS here, we've got them saying that the removal or blocking of Trump's tariffs will spark further market turmoil in months to come. And you see at the bottom there, it says, we continue to highlight volatility in the near term as headlines emerge. We advise phasing into equities to position for medium to long-term upside. I mean, to me, that's pretty generic. That's just, we need to get a quote. We need to get a comment out there. Let's say invest in equities for the long term. But it's interesting that they point out that market turmoil and short-term volatility to come. They've also mentioned there, you can see their CIO, Chief Investment Officer, has said that in their view, tariffs are unlikely to disappear completely and they could rebuild some of the agenda through certain sections of different acts. So again, coming on to that point of, yes, it's good for a short-term boost, but is that long-term sustainability, are the long-term impacts really there when you've got Trump's ego? Just above that, actually, there's quite an interesting video on Twitter where one of the reporters in a press conference asked him about this new acronym that Wall Street's come up with called TACO, or Trump Always Chickens Out. And he got really defensive, really sort of upset about this question. He said, you can see at the bottom there, he said, don't ever say what you said. That is a nasty question. He gets really angry about it. And that plays into that psychology aspect, that ego aspect. Trump, I doubt, is going to let this go. So yeah, I completely agree with the volatility and the uncertainty to come. We've also got Goldman Sachs here commenting that Trump will be able to reinstate tariffs. Now, the investment bank's analyst supposedly said the ruling represents a setback for the administration, blah, 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 but might not change the final outcome for most US major trading partners. They've highlighted there something called Section 122 powers. And again, you can implement tariffs or a form of tariffs a different way. Final one I wanted to highlight, again, in light of the good market performance today, is a comment from Rabobank, which is like a Dutch international bank. They've said the court tariff ruling actually makes things worse. So they've commented that while stock pickers are clearly cheered by this news, we see it unlikely it will do much to boost confidence on the part of Main Street, i.e. The underlying US economy. You know, if you've got Wall Street think of that as the financial centre, stocks, then Main Street as, again, that underlying economy. And the two things they highlighted again is that uncertainty. This is owing to the fact that it does nothing to dispel the elevated level of uncertainty, which is only likely to encourage corporates to sit on their hands when it comes to investment and hiring decisions. And they've said that, this will actually embolden the US's trading partners to take a firmer position in the ongoing trade negotiations, and therefore a heightened risk of reciprocal tariffs if and when the timelines run down. So the short of it is, very good news in the short term. I'm sure if you check your portfolios today, tomorrow, next week, you'll see a lovely green number. But long term, the implications of this are unknown, and they could be still quite significant. So be careful out there with your investing. Still, I would say think twice about going all in on the US. Not financial advice, but that's what I'm doing. And yeah, we'll see how it plays out. So with that said, please leave a like if you enjoyed the video, subscribe if you enjoyed the content, and I'll see you in the next one.